Wall Street faced another sell-off Tuesday as investors grapple with escalating trade tensions between the U.S. and China. The declines coming despite news that China is still sending its top trade official, Liu He, to Washington this week, as Beijing tried to play down the sudden increase in tension after U.S. President Donald Trump tweeted he'd ramp up tariffs at the end of this week on $200 billion worth of Chinese goods from 10 to 25%. Reuters' Michael Martina has been covering the story from Beijing and says skepticism is growing over whether these two sides can really strike a deal.
So both governments in recent weeks before Trump's latest remarks had been expressing optimism about the possibility of reaching a deal. In fact, if you talk to trade experts and even executives and companies involved in China-U.S. trade, there's actually a fair amount of skepticism that any kind of long-lasting deal could be reached, basically because of the rigidity of U.S. demands and because China's essentially unwillingness or inability to implement such reforms. Chinese trade experts say that recent positive economic indicators could mean that both sides have less incentive to quickly reach a deal.
U.S. officials say China has backtracked on substantial commitments made during months of negotiations seeking to end their bruising trade war. U.S. Trade Representative Robert Lighthizer said Monday this erosion of commitments by China was unacceptable. And while they're not breaking off talks at this point, he said that come Friday, there will be tariffs in place.